Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I'll speak about USDCAD. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market, then we will be moving to the commitment of traders, so the COT data, which is what the big players and institutions are doing and how they're moving and shifting their orders, which is what you see right here. And by the end of the video, by putting together these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can notice is that we have a market which is currently retesting a quite strong historical demand and support zone. In fact, what we can notice is that in the past, for basically 2 years, this market has been acting as very strong supply and resistance. Every single time the market tested its zone, it immediately got rejected to the downside. However, we can now notice how the market has finally managed to break out to the upside. And as we know, a very strong historical level of resistance, once it is broken to the upside, becomes support. And now that the market is retesting the level, we have a retest of previous historical resistance, which is now turned support. And in a situation like this, we could expect institutional buying of USDCAD inside of this zone. And we will be speaking about institutional buying in just a few moments when we move to the commitment of traders analysis. But for now, let's keep all of this in mind and also notice how the market is currently actually in a confluence of demand and support zone. Because what we know is that after an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And what it shows us is that we also have the 0.618 and 0.786 retracements from a Fibonacci perspective exactly inside of the same level. So we have previous horizontal resistance turn support and the Fibonacci area lining up exactly in the same zone, increasing the probabilities of seeing institutional buying inside of this area. Let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, we can notice a massive impulse to the downside, but after the impulse to the downside, we haven't seen yet a strong reversal. Actually, what we are just seeing after this huge push to the downside is now the start of a deceleration. Now, usually when you're having a deceleration, you have many candles essentially moving in the same zone. At some point, that deceleration actually becomes an accumulation and then the rejection to the upside happens. I've seen this happen over and over again. Let's see if we can easily see an example of that. Well, we can see that, for example, here we had very strong bearish price action, then few weekly candles started, then the market started moving horizontally, and then the rejection to the upside actually started. So this could be in the process right now. So a massive push to the downside, then we start to get the deceleration, then we get the accumulation of longs, and then the rejection to the upside actually starts. Now, for the rejection to the upside, the first upside target would be the 0.32 of the Fibonacci taken on the impulse leg. This gives us a first upside target at this 0.32. So there is definitely a lot of space that this market has for a rejection to the upside. Dropping down on the daily time frame, we can see how clearly the market is now stuck in this range. We essentially have this deceleration in the form of a wedge formation. And in a situation like this, at some point, the market breaks out to the upside. This pattern usually brings a rejection to the upside. It's obviously not every time, but when there is such pattern after a strong rejection, it essentially signals how sellers are exhausted, because every time there is a new push to the downside, immediately buyers step in. And at some point, buyers win on the sellers and the market actually breaks out to the upside. Now let's go and see if institutions are already longing USDCAD. To do that, we have to check the commitment of traders. The non-commercials for the CAD. Now keep in mind that all currencies on the spot are already traded against the USD. So if we're looking at the data for the CAD, we're actually already looking at CAD USD. So since we want information on USD CAD, we simply have to reverse everything. And what we can notice here is that we went from minus 130 to now minus 67.2k net positions. So essentially, with the last few reports, net positions have been increasing, which means that institutions have been shorting USD CAD, because if institutions are increasing their net positions, so longing CAD USD, they are shorting USD CAD. So it's no surprise that the market has been moving to the downside aggressively, because clearly institutions were shorting USD CAD. But now we're starting to see essentially, almost for the first time, I would say, minus 2,300 longs, which means that institutions are closing their longs on CAD USD, so they're closing their shorts on USD CAD. And if institutions are closing their shorts on USD CAD inside of this area, it usually is only a matter of time before longs get added, and then a potential rejection to the upside could potentially happen. So in a situation like this, what would I expect? And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. As my students know very well, the monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this area. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you click on the like button to support the channel. Also, any questions you might have, let me know in the comments below. Also, new pairs that you would like me to cover in my next videos. Make sure to also subscribe to the channel so you never miss new updates, and I will see you in my next video.